So support and resistance is, when you are establishing um, almost like higher highs or higher lows, or higher lows and lower lows. So in a sense, in retro sense, it would look like this. Hold on, let me go to a board so that way you can kind of see everything too. Just 1 second. Let me go to the charts. Gotta wait for this to load up. All right. And okay, cool. So as we know, support and resistance is normally starting from a line, from a high point, and a line to a significant low point. We know that when price hits that particular line to the top frame, we know this as resistance.
Right.
And we also like to call resistance as the roof or whatever. And typically what happens with that is that when the market hits there, it hits a point that it cannot break. Almost like, you hitting your head on the rooftop and you're trying to break through, you cannot. You know what I mean? That is your resistance. That is, you can't break through it. So it's resisting to your force. All
Right.
right. And the same thing with support. Your support is pretty much exactly how it sounds. It's your floor. You know what I mean? It's your support. Every house, when it's being built, it has support beams. So that way the house doesn't blow down or nothing happens to the house. So this is your support.
Right.
All right. Now, in the midst of understanding support and resistance in higher highs and higher lows, what happens typically with support and resistance is it acts as both as points of market respecting, but it also acts as understanding where the market will pull back to before continuing with its trend, or marking up the highs and the lows of the market. Does that make sense?
Yes.
So if we're on a downtrend, we would typically need to see the market go to a resistance and to a support, but break through the support, right?
Right.
Because it would need to go down. So anytime that the market breaks through support, that's going down. Anytime when the market breaks through resistance, the market is going up.
Okay.
All right? Does that make
So
sense?
tell me
Mhm.
something, because
Yeah,
I've
absolutely.
often heard, okay, when you're retesting and so on, it goes up, it's retesting, then to come back down. So if it
Right.
goes up and it doesn't break through, then you're expecting it to go back down.
Right. So, say for instance, there's always going to be some type of retest somewhere.
Mm-hmm.
Sometimes you look on a higher time frame and it looks like it's just a straight way down, But then when you look on a lower time frame, it looks like there was little pullbacks in there. You know what I mean? And that's what
Right.
happens with the market. And we're going to show you, I'm going to show you on EU this example, all right, that I'm talking about right here. But just to break down the support and resistance, we're going to break this down. Now, typically, in order for this to be considered a downtrend, it needs to not only break through this support line, but it also needs to come back up to retest it.
Oh, okay. Okay, I get you.
All right.
Mm-hmm.
So just simply breaking through the line is not good enough.
Okay.
It needs to come back up and retest this area. Sometimes the market will come right back to the specific line, but
Mm-hmm.
other times you'll see the market actually stopping somewhere halfway there and then going down.
Okay.
Sometimes it will stop halfway there and then go down. All right. But it is not until the market decides to come back and retest this area is it then a downtrend.
Okay. So is
So,
that what is referred to as a flag? I've heard the term being used that it must form a flag.
yes, that is also the term of a flag. But
Okay.
always remember when they're talking about flags, they're literally just talking about a retest. All these different analogies mean the same thing.
Okay.
It's just they make it so that way it's easier to remember. All right.
Okay.
And even with this, again, I don't want you to get confused because this kind of looks like, because you probably think, oh, this is a flag. Like you're looking at these little things and saying that this is a flag. And that's not what I want you to focus
No,
on.
no, I'm thinking of it's going back up because
Uh
you've
huh.
said once it breaks through, then it has to go up and then
Uh
come
huh.
back down.
Okay. All right.
Right.
Awesome. I'm glad. I'm glad.
Yeah.
Okay. I just have to make sure. So we got that.
Mhm.
Now, the reason why we have to wait for the market to do that specifically is because what can happen is this right here. It can come right back in to this,
And go back up to to the
mm-hmm,
highest point.
to the highest point.
Right.
So we have to be aware of it. That's why it's so important. A lot of us will see the break of our resistance area and automatically assume that the market is now on a downtrend without having any type of notification, any type of confirmation, anything letting us saying that it is now confirmed that the market is going down. And that is where we get into those losing streaks because it's nothing showing us that this market is now going in that direction.
Okay. So anytime it comes down, it breaks through support, it must go back up and
Mm-hmm.
then come back down.
And then
Hmm.
once it goes back up, it has to retest, be confirmed that it's going to go down for it to become a downtrend.
Okay, and the retest is retesting what would become now, what was one support, which will become now resistance.
Resistance, exactly.
Okay.
It is not until the market comes back up, respects this area, and then go down will this support now be X'd out and it is now resistant.
Right. Okay.
Mm-hmm.
Okay, so conversely now, if we're in an uptrend, so we're at the top, we have resistance at the very top. We're in an
Mm-hmm.
uptrend. In order for us to know that the trend is continuing to trend higher, it must break resistance,
Mm-hmm.
come down, and then go back up.
Exactly. Exactly. So that would look like this. This was resistance. It would need to break through, which we would
Right.
see that the market would be possibly going up. We would know that. But then we would need to see this. Then that would happen. And that resistance would be now support.
Right.
But it is not until we know about this. We got to see. And again, it does not have to come all the way back to this line. It can stop at any of these points. It can stop here, or it can stop here.
Okay.
And then go up. All right. But you have to wait for the market to come back, to pull back, for that to be confirmed. Because again, just like we're going to the downtrend, this is what can happen. The market can come back down and come right back in here. And now where you thought that the market was going to stop right here, so you just jumped in, it comes back down a little bit further. So you have to wait for confirmation. Now, what is the confirmation? Candlestick patterns. All right. But that's another thing. I just want you to understand support and resistance for right now. Okay.
Right.
All right. But you understand now the importance of waiting to jump in versus as the market breaks the line, the support or resistance line, you jump in. You don't want to jump in as it's going down. You want to wait for it to come back.
Right.
Because if you enter, say for instance, you enter right here. You're in profit a little bit, but then the market starts to pull back.
Right.
And now you leave yourself in the possibility for the market to come all the way back here.
Okay.
So you never want to jump in as it's going down. You want to jump in once it pulls back. It's respecting the support or resistance and then going in that direction.
Okay.
Does that make sense? And if I need to repeat it, I can repeat it. That's fine.
It makes sense. What obtains in swing trades?
In swing trades?
Uh-huh.
So hold on. Let's keep this going, because this is the same thing that's going to apply to swing trades too. Mm-hmm. Okay. All right. So we got this broken down so that way you understand this. So you understand so far that in order for you to have support and resistance, it needs to what? It needs to go up, break either a support line and a resistance line,
right,
and then pull back, and then be confirmed to continue up or continue down.
Right.
All right. That's the first thing. And that's the main thing that you need to know with support and resistance. And this is also depending on higher highs and higher lows. All right. So let's go ahead and start this over with this. All right. So this is your support line. This is your resistance line. That was terrible. There we go. Just like we said before, the market comes up, it breaks through resistance. Is this a downtrend if it breaks through resistance?
If it breaks through resistance. So,
is it a downtrend?
So, that is resistance. Resistance is normally, so you're saying support is at the top?
Yeah. Mm-hmm. Support is always at the top, resistance at the bottom. So if the market breaks through resistance, the resistance line, is it now in a downtrend?
No, well, it has to be confirmed first.
There we go. That's, ooh, you on it. That's it. That is it. That's what I wanted to hear. It has to be confirmed first. It could possibly be, but it has to be confirmed first. So now what are you doing?
So then it has to retest. It has to go back up.
Exactly. So in order for it to go back up, what do you have to do though? What is your actions at this point?
You have to wait.
There you go. You have to wait. And the reason why I wanted you to say that is because a lot of people do not have the patience to wait for that to happen. And you need to know that it's important for you to wait for that to happen. Okay. So what's next after that? You wait for the confirmation, right? It pulls back and it's confirmed. And then once it's confirmed and you know that it's going down, that's when you enter into the market. Now, simultaneously, as this stuff is happening, and we know that this is a downtrend, it's creating what? This resistance is now what?
Support.
Support. So if we got a new support, then what does that also have to mean with resistance? Because there always has to be a roof and a floor for structure to work. It always has to be a roof and a floor.
Right. So then your resistance is further down now.
Exactly. Your resistance is this area here. That was the last pullback area. That's your resistance. Do you know why that was your resistance?
That's the area that was tested. Yeah.
Mm-hmm. Yeah, that. And then also that was the new lower area.
And you look okay.
That was a new lower area. So when the market broke through this area right here was the lowest area. But now the market broke through that and created a new lower area.
Mm-hmm. Right.
So this area became resistance. That became my new resistance. This now my new support.
Right.
So in the midst of all this thing, it's creating something. It's creating what we call highs and
Yeah.
lows.
Right.
So this is a high, a higher high. This was a higher low. Or I would say a lower low. No, this was this was a lower low. This was a higher low because it was high, but it was lower than this high, right?
Okay. Okay. Yeah, I get you with that. Yes.
And then this is a lower low.
Lower low. Right.
You see? And on a downtrend, we know that this has to happen for it to be confirmed a downtrend. So not only do we have to know that support is turning into resistance, we need to see that support is being broken and finding a new resistance, and then support is turning into resistance. But we also need to find the highs and the lows in the midst of that,
Okay.
right? Am I confusing you?
No, you're not. You're not.
Okay, I had to make sure. I had to make sure. Okay. And on the way down, it repeats itself. It literally repeats itself. On a downtrend, this will literally repeat itself over and over again. It's the same thing. So with this here, this area right here, what is this area right here now?
Your resistance.
That's the resistance.
Mm-hmm.
Or support. That's support.
It's support.
Mm-hmm. Why is this support? Why is this support?
Okay, so it has broken through.
It's broken through.
So here was resistance. So it has come down to the next area of support.
Mm-hmm. So once it comes back to this area, right, and it comes here, it will start to do this number. It go right back up, right?
Right.
And And then once it
It goes
does
back
that,
up, and this is resistance. So it's testing this to
mm-hmm,
come back down.
to come right back down.
Uh-huh.
Exactly. So the same thing is happening over and over again in a downtrend, and vice versa in an uptrend. Every single time the market is just redoing itself over and over again. And you ask the question about, how do I get into a swing trade? How do I know that to hold a swing trade? Well, with swing trades, you're literally monitoring your trade. Say, for instance, you entered in right here. This was your entry. This was your entry right here. The market goes down, it goes down, it goes down. It hits this area. But when it hits this area, a candlestick, a really powerful candlestick, comes by and it creates and it pushes through that support and it goes down some more. You're still holding in at this point, but you're kind of scared because you don't know when to pull out. You don't know when to get out of this trade, right? The market starts to go up. Now you're kind of scared because you feel like you're going to lose your profits that you gain. But there's a clue to let you know that it's a possibility for this thing to, just be going up for a reason, just be pulling back for a reason. It doesn't necessarily mean that it's going to pull back and then, go right back up. But there's a clue. There's something on this screen right now that can tell you that there's a possibility that this market could continue down. What is that? What is on this screen right now that's showing you that there's a possibility?
That's on the screen right now.
Mm-hmm.
That there is a possibility that the markets will go down.
Yeah, will continue down.
The fact that what's on the screen, because it went up to test support, resistance, sorry, it's coming back down. What's on the screen? The trend.
Okay. The trend, yes, the trend, but what is it? It's right there. You already said it too.
The higher low.
The support line.
Support, okay.
The support line is here. These lines let you know if the market is going to continue down or go up. Mm-hmm. That's what these lines are here for.
Oh, you're talking about what was established before.
Yeah, what was established before. There you go. Okay. What was established before to let you know that the market is still relevant. It's still going down.
Right.
It was these lines. Mm-hmm. You already put the support and resistance lines there. Mm-hmm. So in order for you to know that this market is going to keep on going up or continue going down is these lines. Mm-hmm. So as the market goes up, you have to wait for the market to get around these lines. So that way you can say, okay, now the market is about to go up. Let me go ahead and close it. Or you can say, let me monitor my trade. Okay, it's coming back to my support area. Is it going to break the line? No, it doesn't break the line. So I'm going to stay in it and it goes down further.
Okay. So let's say it broke the line, it broke support. Mm-hmm. Then you'd use the opportunity to get out, or you'd say
just like with the downtrend, what do I have to wait for it to be considered an uptrend? So I have to wait for it to go up
and then come back down,
and then do that.
Mm-hmm. Right. Okay. I get you.
You see it? Okay, there you go.
I get you. So even though it may go up, You still have to wait for it to come back and then go back up.
Yes.
Mm-hmm.
Yes. Exactly.
Okay.
Exactly. So we'll give you a couple opportunities to get out of the market. It will give you opportunities to, you know. So even if it does that, because it can typically, like, and this is why we get scared. It could come all the way back up here, and then the market can decide to go like this.
Right.
You know, so that's why I said we don't just get out just because the market is pulling back and it's, you know, it seems like, oh man, we're in the red, let me get out of it.
Mm-hmm.
No, you wait for the confirmation. There's been plenty of times where I entered into a trade and the market came right back up here. And instead of me closing it, what I did was I just walked away from the chart or I went to sleep. I said, let me take a little nap. And
Okay.
that's what I do. I really do. And then as soon as I wake up, it's going
Uh-huh.
right down. It's going right where it needs to go.
You're in blue.
I'm in blue. Exactly. Because I
Wow.
already knew it. And
Mm-hmm.
that's the thing about it, you know. So you got to wait for that confirmation. You have to. It's so important. And that's how you confirm, like, for swing trades. Swing trades is no different. It's the same thing. The market goes down and then it comes back up. It hits a retest and then it goes down some more. And you just monitor your trade. And as it goes down, now this is the important part right here, okay? Because we also have a stop loss, right?
Right.
You have a stop loss in there. Now, as this trade is going down, it comes back up and then it hits this level of support term resistance.
Mm-hmm.
And it starts to go down at this point. Now, once it has hit that first point and it's confirmed that it's going down further, what you're going to do is move
Your stop loss.
into a stop profit.
Mm-hmm.
So now, if the market does decide to say come back all the way up here, you've already grabbed your 10 pips or 20 pips already.
Right.
So you see?
Yes, I see that. Would I be able to get this recorded? I need to go over this over and
Oh
over.
yeah, absolutely. This is yours. This is yours. All right.
I
And then
tried doing the support and resistance one in the academy, but it's very low. It's barely audible.
oh no. Oh really?
Yes.
Okay, so I gotta redo that or something. And that's not
No,
good.
not for you. Not
Oh,
for you in IML Academy on the
oh, in
technical
IML.
analysis.
Okay,
Yes.
I got you. Okay, I
Uh-huh.
understand. All right, so now I'm gonna go ahead. I'm gonna go back here so that way we can kind of see this. So now, based off of what we talked about, now we can go back here and actually see support and resistance happen. All right, so the market's going down. We see that there are red candlesticks happening.
Right, right.
And as soon as we start to see those blue candlesticks come in, that's when we know that the market is now pulling back, right?
Okay.
Because we know that the red candlesticks represent what?
The bears, the cells,
Yeah, and the
it's
blue
going
represents
down.
what? Exactly. And then what the blue represents?
The bulls coming up.
There you go. All
Mhm.
right. All right. So once we know that, once we see that that's happening, now we have a low. So that's why we draw that line. That's why I draw that line there because I know my low's established. It goes back up. It hits this area. Now I know that the market is not only hitting a high, but also, you know, this is where my market's going to turn around. So sometimes I even do this. I'll even put this here. Hold on, I capitalize that. Then I put this up here. Right. And then just like we said before, the market creates a high, and then what happens? It breaks through.
Right.
Now support, now where it was resistance or support, now it's turned into resistance. The market goes down again. Guess what? I draw another line. What is this? This is my new what?
Support,
Support.
support.
right. The market goes back up. And also, this is my lower low. This is my new lower low. The market comes back up. Does it break this previous area?
No, it doesn't.
Exactly. So now this is my higher low. It's my new higher low. And then it goes down again. Creates another low. You see where I'm going with this?
Right.
Mm-hmm.
So the trend, obviously, it's going down because it's creating higher lows and lower lows.
Yep. And how you track it is so important. Utilizing trend lines or even support and resistance lines is fine. Whatever you see fit, you can utilize this. But I utilize these lines on smaller time frames for me personally, and then I use actual support and resistance lines on a higher time frame.
Okay.
But you see how the market is literally broken down like that. Every
Right.
single time it's going down, it's creating some type of high-low scenario. Goes down, comes up, and it doesn't break this area. That's how you know when you draw a line and you know that the market's going up, but it does not break that previous area, you know it's going down. And that's what happened every single time. Look at that.
Right.
Every single time. And then when it wants to go on an uptrend, it will do the same thing. So you see every single time until it decided to go on an uptrend. Now what did it do?
It started breaking.
Mm-hmm. Started breaking, creating another one. Draw the line right here. It broke it, it came back up, found support. Same thing right here. Broke it, came back up, found support, and went up. And it happens literally over and over again.
Okay, so here now, this came down, but it did not.
I'm talking about right here.
Yeah.
Mm-hmm.
So the trend has changed right here.
Mm-hmm. Yep. This is where the trend changed. Where the trend went up, and then it went down.
It broke through that.
It broke through. And then what did it do? It came back up,
Came
but
back up. It
it
didn't
couldn't
break through that.
Mm-hmm. And then it went down again.
Right.
Right. Now, sometimes it won't be perfect. It won't be textbook like this. This was not perfect. So you would have jumped in this. You would have drew this line up. Say, for instance, let's say this line didn't exist. You would have drew this up. You would have said, okay, this is my high point. Okay, this is my low point. All right, you would have saw that the market came back, and you would have been like, oh, well, wait a second. Okay, so it did not. Not only did it not come back up and hit this area and go down, but now it went down and then pulled back up. What do I do? It's still the same thing. Even if it comes back up, if it does not break this area and then find support, it has to do this. It still has to do this for it to be an uptrend. So like that.
Come down and then go back up.
And then go back up. Right. So you know that this trade is still valid to go down.
Right.
Right. So not only did it not break this high, but what? It didn't find any support. It just came back up and it went right back down again. And not only that, but you can draw this line over and it's still relevant here. So it broke through, found that resistance, and it went down some more. And it just kept on doing it.
Wow. Going
Low
down.
here.
Wow.
Mm-hmm.
I was looking at this on Sunday when the market opened, and it gapped up so much from Friday's close.
Yeah. But once it gapped, this
Mhm.
was the gap right here that you're talking about. And you notice when
Yeah.
even though it went up, what did it do? It filled the gap.
Yeah, it went right back down. Yeah.
Mm-hmm. So a lot of times when the market gaps, normally a lot of times the market will fill those orders in. Make sure that those orders are filled in there because it's missing. It's like missing money, almost like missing price action. But that's another lesson. I missed this here. I was waiting for that. That might be actually one of my entries right there. Yep. But this is it. This is what I want you to work on. So I want you to practice drawing these lines and marking up
Okay.
the highs and lows. Okay, the
Okay.
same way that I did. Okay, finding those low points like this, and then finding the high point, and then drawing the line. Now, the only time that I don't want you to like say draw a line right here, don't do that because you already see that this area right here didn't break that,
Right.
right? So you don't need to draw the extra line. You just already know that, okay, your expectation, anytime when you're drawing these lines, your expectation, the reason why you're drawing this, because you want to see if the market is going to do this. So here, and then do that.
Right.
Right? That's all you want to see. So sometimes the market is not going to be perfect. It's not going to always pull back to the previous line. Sometimes it's going to do something like what it did here. It pulled back halfway. This is actually going off of what I just, what I drew up for you. Remember when I said
Yeah.
that the market's not going to be perfect? It's not going to always pull back to the previous line.
Right.
Remember? So it's
Yeah.
sometimes it's going to pull back halfway and then it's going to go down. So your job is just to mark out those previous lows and those previous highs. So that way you know that the market could possibly come all the way up here, right? Before going down. That's all you want to know. So that way you can establish that you don't get afraid if the market starts to pull back. You won't get afraid because you know that the market could possibly go all the way back here before it continues down.
Right.
Mm-hmm. Yeah, but this was a good one. This was a good recording, I feel like.
I appreciate
So,
this one so much.
oh yeah, absolutely. I feel like you learned a lot too. Like you gathered a lot in the way that you were talking. I'm really am proud of you. That was good.
Thank
This was a really
you.
good session. No problem.
Thank you.
All right. So I'm gonna get off of here, and as soon as this gets done uploading, I'm gonna send this to you. Okay.
Thank you. Appreciate that so much.
No problem. No problem. You keep up the good work. Seriously, you did good today.
Thank you. Thank you.
No problem. All right.
Okay.
Talk to you later.
All right. Thanks again.
Mm-hmm. Bye bye.
Okay. Bye.